Welcome to Set Up Opening Balance. In this section we need to explain how we're going to get the opening balances in from your current bookkeeping, and what I mean by the opening balances are going to be pretty much your balance sheet items. So your fixed assets, your accumulated depreciation, your cash or operating account, retained earnings, liabilities. So somewhere we have to enter that in so your balance sheet's going to be accurate in Adam. So typically when you were to go into if I recall using QuickBooks years ago, when I set up an account, it would ask me to enter in my opening balances. So we don't have that type of setup procedure here, but what we have to do is to get those into Adam, I'm going to create a client, and the client's name is just called opening balance. So I'm going to go ahead and type this in, opening balance, and I don't think you'll find any client called opening balance. So I'm going to add a new client, and I like to just switch it over from individual to business. This makes it easier. And you can put any ID number you want. It can actually be a number, it can be a letter. I'm just going to call this My Books as my ID number. I'm going to save it. And I'm going to scroll down, and obviously this information is really not applicable because it's kind of tied to a tax business. So it doesn't matter what you have in here. I'm just going to default it to the first thing I can select. I'll put NA for referral type. The main thing is here you want to make sure your business type is going to say Bookkeeping My Office. Save it. And when you do that, your status is going to change, and as you notice now it's set up as setup because I had it defaulted at, my lobby is my setup. And I'll leave it for that. For now I'm going to leave it in setup until I'm done entering my opening balances, and I'll put a prepare. I'll just say not assigned. Save it. Okay, so now I'm coming down here. So now I have to get I have an opening balance for furniture and fixtures. So I'm going to select my transaction type, and I'm going to scroll down to my assets. And I have furniture and fixtures. As you see here, the debit column is going to open up, and my date field is going to open up. So all I'm doing is logging journal entries, debits and credits. And it's kind of nice because I can't put a credit in here for furniture and fixtures unless I were to go back in admin under transaction types and open up that field. Now the date, I'm going to go ahead and wipe this out because I don't want it to be the current date. I'm going to set this up for bookkeeping for my 2010 calendar year. So I want to go ahead and put my date is going to be, I want it to be actually in 2009 because when I show you how to do reports, the date range is going to be based on, for example, for 2010 year, it's going to be 1/1/2010 to 12/31/2010. So I don't want to have my this information recorded as in 2010 because it's going to assume that I made that purchase in 2010, which I did not. So I can put any year or any date. It just has to be prior to, the year you're going to start using Adam for your bookkeeping. So I'm going to go ahead and put 12/31/2009. And my furniture and fixtures is $150,000. And I could make a note here if I want, just say, opening balance. But it's already going to say that because a client name right here is opening balance. So don't really need to do that. I was just showing that there is a note field here that if you want to add a description to what that is, this is where you'd put it. So the next one, I'm going to have my furniture and fixtures are fully depreciated. So I'm going to come down here to less accumulated depreciation, and as you notice the date field is going to open, and now it's going to default to a credit because accumulated depreciation is a credit. So it's going to reduce my assets down to 0. And I'm not trying to do accounting here, obviously you guys all know that. I'm going to go ahead and change the date, put it back to 12/31/2010 or 9, I'm sorry, and I'll go ahead and save that. So now my balance, I'm balanced and I'm showing 0 balance. I got my debit and my credits are equaling. So now I have my furniture and fixtures in there. So all I did is pull that from my balance sheet from my 2009, whatever software you're using, or from your income statement, or from, I'm sorry, your balance sheet. Now I'm going to put some, show what my cash account was, as of 12/31/2009. So I'm going to come down here to my assets, and operating account is what we call for our cash account, but you can call it whatever you'd like. 2009, and I'm going to put in here 30,000. And I'm going to save. Now I have both columns open, debit and credit, because there's times in my operating account I actually have to make a credit to my operating account. So I've opened up both fields, and you're going to notice you're going to have to do that sometimes, depending on the account or the transaction type. So anyway, when you're logging in your journal entries, you might notice, oh, why does he have the credit field open? It's because at some point I had to actually make an entry on the credit side for that account. Save it, and now I'm going to put, say I have a balance on my MasterCard. So if I still had a balance on that, 12/31/2009, going into January 1st, 2010, I had a balance of $20,000 still. Okay, and lastly, I'm going to log in my retained earnings. So I think I have to go down a little further here, retained earnings. Again, the date would be the same to put my opening balances in. And I'll do, oops. And I'll just say it's 10,000, I guess, because that's what I have left to balance this out. Is that right? Yes. Okay. So in this example, all I did is I set up my furniture and fixtures, which typically you're going to have something, my accumulated depreciation, my cash account, and I had liability still with my MasterCard, and I went ahead and put in my retained earnings, what I have in my retained earnings, and that's all you should have to do. You might have more, obviously, more accounts here, but just enter whatever you have, and just make sure the key is the date. Make sure you do not put the date that you're going to start using Adam for doing your bookkeeping. Make sure it's the year before that. It doesn't have to be 12/31, but any prior year before that. You just don't want to make it the same date you're doing your bookkeeping. Otherwise, Adam's going to assume you actually made that purchase in that year. And so once you have this set up, you probably will never have to go back to your opening balance again. Okay, it'll always be there. Oh, one more thing. When we're creating these clients, if you don't want anyone else to have access to this information other than yourself, you come right up here in the client information, select the title bar, and right in here you have permission levels, who can access this. So I'm going to just select myself, Mark. And so now Mark is the only one that can access this information, and the administrator. So typically you're probably going to be the administrator, but if you don't want anyone else to access your confidential data, that's how you would restrict them from it. That's all I have for setting up your opening balances. We'll see you at the next section. Thank you.